Hello dear students, in this video we will see the final accounts of a proprietary concern, that is some revision of this final accounts of a proprietary concern. This will be a compulsory question in your exam for 20 marks. Okay, so let's start. So in final account of a proprietary concern, what we need to prepare? See, in question, trial balance is given and some adjustments are given. So trial balance, we have to post items from trial balance to trading account, profit and loss account, and balance sheet. Okay. So remember one thing, trial balance items will be posted only once and only at one place. And adjustment effects are given on two sides. So this you have to remember. Okay. Again, there is one more thing to tell. Whatever debit balances are there in trading trial balance, that will be recorded either on trading account debit side or on P&L account debit side or balance sheet asset side, depending on the nature of that item. And all the credit balances of trial balance will be recorded on either trading account credit side, profit and loss account credit side, or balance sheet liability side. Okay, so remember these points. Now we will go for the trading account format. Okay, so you just have to give the heading in the books of whatever name given in the question, give the heading trading account for the year ended and write down the period for which you have to prepare this trading account. Okay, so let's see what is included in trading account. First is to opening stock. This will be given in trial balance on debit side. Then two purchases. You have to take a purchases amount in inner column if there are some purchase returns or any unrecorded purchases. Okay. Then you have to deduct purchase return, or it can be given as return inward. One more thing regarding purchase return or returns. Sometimes in question, only return is given and you have to find out depending on their debit balance and credit balance, whether it is purchase return or sales return. So remember this also. The purchase return or return on credit side indicates that is purchase return, and return on debit side indicates that is sales return or return inward. Okay. Then all the types of direct expenses will be included in trading account. Then next is to freight and carriage inward, to custom duty, to wages, to coal, gas, fuel, etc., to royalties, to factory expenses. And on credit side, you have to record sales, less sales return, or that can be called as a return inward. Then by goods distributed as free sample, by goods taken by proprietor for personal use, by closing stock. See, this closing stock is the part of adjustment. So one effect is recorded here. We will going to see these adjustments in the next few minutes. Then see, you have to balance this trading account after posting the trial balance items or whole items. Okay. So the ultimate result of this trading account will be, if the credit side is greater, then it indicates there is gross profit, means your incomes are greater than your expenses, so you have gross profit. So it is showed on the debit side of trading account as to gross profit carried down. See, it is carried down to profit and loss account. Okay, so now we will go for the profit and loss account. Before going to profit and loss, just I have to tell you something about the goods. See, purchase, sale are the main activities. And if you are taking goods out of the business for any other use, then that will be credited, like goods distributed or goods taken by proprietor for personal use. Now, let's go for profit and loss account. So sometimes trading and profit and loss account is prepared in one page only. If you want for better presentation, you can prepare it separately on separate pages. Nothing is wrong. Both the formats are correct. So let's start. See, profit and loss account for the year ended. If you are preparing it separately, you have to give name separately. Okay. So gross profit and gross loss is recorded in profit and loss account. If there is gross profit, you have to brought down on credit side. Okay. And if any loss is there, gross loss is there, you have to brought down that gross loss on debit side. Okay. So let's see what expenses included on the debit side of profit and loss account. See, all these expenses are of indirect nature. Okay. So it includes salaries and wages, rent rates and taxes, insurance, bank charges, to discount allowed, audit fees, to depreciation on land and building, plant and machinery, furniture, etc. Okay, so remember, these are the expenses, indirect expenses having debit balance in trial balance. Okay, now we will go for the credit side. See, by rent received, by commission received, by interest on investment, by interest on deposits, by miscellaneous income, by discount received. Okay, so credit side indicates what? It's an income, and debit side indicates all the indirect expenses. See the resultant figure. That means when you calculate the balance, you have to calculate the rough total of credit side, then you have to take the total of debit side and write the total. Some other expenses are also there. Before balancing, we will just go for these expenses. See, to traveling expenses, to advertisement, to printing and stationery, to interest paid, to loss by fire, to loss by theft, to packing expenses, to commission. See, this to commission means this is the commission which is paid. Then to bad dates, old bad dates, if any, in trial balance, then you have to take it on debit side. Add new bad dates, add new RDD, less old RDD. Okay, and whatever will be the balancing figure of bad dates, that will be recorded outer column. Okay, so after calculating the credit side total, that is income side total, you have whatever total for any side, whichever total is greater, you have to write that total on both the sides. Deduct from that greater total all the expenses, whatever you find, that will be your net profit. Okay, if credit side is greater, then you will have net profit. If your debit side is greater, that means the expenses are more than your income. So in that case, you will have net loss. Okay, so here in this question, we will assume that here it is net profit. Okay, case one is there for net profit. So net profit or net loss, that would be transferred to capital account in balance sheet. So what you have to remember, if there is net profit, you have to add that net profit to capital account in balance sheet. And if there is net loss, you have to deduct that net loss from that capital. Okay, so this will be the format of profit and loss account. Now we will go for the third statement, that is statement of affairs, balance sheet. Progress. For balance sheet, we will not write debit and credit. Okay, remember this is very important, as this is a statement and not an account. Okay, so this question might be asked in your MCQs. Balance sheet is a dash. So the correct answer is it is a statement and not an account. Okay, it is also known as statement of affairs. Okay, so divided into two parts. The left hand side is liabilities and right hand side is assets. Okay, So what is included on liabilities? Liabilities are the dues of the business to others. Okay. So capital, opening balance you have to consider here. Add net profit. If any loss is there, you have to deduct that net loss. Okay. Then add interest on capital, less drawings, less interest on drawings, and whatever balance is there, that will be on in outer column. Okay. Then other liabilities include bank loan, bank overdraft, sundry creditors, bills payable, outstanding expenses, pre-received income. See, these outstanding expenses, pre-received income, interest on capital will be the part of adjustment. So you will know where these amounts came. So we will just see that in the adjustment part. On asset side, there are whatever properties you have and closing balances you have in your hand at the end of the year. Okay, so that includes cash in hand, cash at bank, bills receivable, sundry debtors, goodwill, furniture, plant and machinery, land and building, prepaid expenses, outstanding income, and closing stock. Okay, so this fixed assets value, that is furniture, plant and machinery, land and building, that will be recorded after deducting depreciation. Okay, and after recording all the items from trial balance and after giving effects for all the adjustments, our balance sheet gets tallied. Means what? Your asset side is equal to liabilities side. Okay, so this will be the format of balance sheet. Now we will go for the next important part of final account, that is adjustment.